One of the biggest mistakes small investors can make isn't picking bad stocks, it's owning too many of them. And the confusing part is most new investor advice actually pushes you towards doing that. When you're investing small, more stocks doesn't always equate to a safer portfolio. As a matter of fact, it can actually slow your growth. When I started investing $30 a week a few years ago, I thought diversification meant buying as many stocks as I could. But what I didn't realize is that I was spreading my small amount of money so thin that nothing could actually grow. So in this video, we're gonna talk about how many stocks actually make sense when you're investing small and how fewer stocks can actually help you grow faster. Most new investors go online to websites like YouTube and they see new investor advice like diversify your portfolio or don't put all your eggs in one basket. So the natural reaction becomes buy a little bit of everything. I personally thought that buying more stocks was actually the safer option. But what I was actually doing is making a portfolio that looked diversified, but wasn't actually doing anything for me in the long term. And eventually I realized something important. Maybe obvious, but pretty important. Small portfolios don't behave the same way that large portfolios do. When you're investing small, each position becomes tinier. Gains barely move the needle, and staying consistent becomes harder. It's like this. Imagine if you had $300 and you invested across 15 different positions as opposed to 5 different positions. If one of those stocks grows by 8% a year, then the impact it's gonna have on that more focused, smaller portfolio is gonna be a lot more noticeable than in that larger 15 stock portfolio. Diversification protects larger portfolios. Over-diversification slows small ones. Even Warren Buffett, arguably the greatest investor out there, said himself that over-diversification only protects against ignorance. And early on, I realized for me, it means something different when it comes to being a small investor. You guys remember that memory card game as a kid? You would put a bunch of cards face down, flip them up by pairs until you match each pair by the picture that's on the other side of the card. Of course, when you add more cards, it makes it harder to remember where the pairs are and it makes it even longer to actually match them all. Well, investing in too many stocks feels the same way. You start checking your portfolio constantly, decisions become a lot harder, you're more tempted to sell early unintentionally, and your portfolio ultimately just loses all of its conviction. Because when you're investing in so many positions, each one of them matters a little, and because everything matters so little, nothing matters enough to hold. So instead of asking how many positions should my portfolio have, I thought of a better question to ask. Can I clearly understand each business? Can I keep adding consistently? And can I actually keep following these companies without feeling overwhelmed? When you're investing small, fewer positions actually help you learn faster and compound sooner. And that exact number is going to look different for everyone. Of course, it just depends on your level of comfort, but especially early on, owning a smaller amount of high quality businesses is going to be a lot better than just trying to buy a little bit of everything. As your portfolio grows, your level of knowledge is going to grow, and as that grows, diversification is just going to naturally grow as well. Diversification isn't something you need to start with, it's something that you earn over time. Basically, small investors don't need more stocks, they just need clear decisions. When you're investing small, simplicity isn't a limitation, it's actually an advantage. What's actually a disadvantage is overthinking. Not only can overthinking happen easier when you have a portfolio made of a bunch of stocks, but overthinking can happen before you even start investing. It can actually prevent you from investing to begin with. That's something you're dealing with. I actually made a video recently about how overthinking impacted me negatively before I even started investing, and how a simple mind change actually impacted me positively in the long run. So make sure you check that out if you guys are interested, but I do appreciate you guys watching this video. Until next time, as always, take care.